Good afternoon, everyone. So this is Arvind here, and I just a brief introduction. I work with the company as in the capacity of a GST expert, and I'll be running this webinar through for you today. Very warm welcome to all our users. We'll get started now. So before we go ahead with the topic for the day, just a brief on what the company is. KYSS is a product of JITFIN. The company was founded in 2019, and the primary mission was to basically help MSME owners with different hurdles. The founders of the company come with a great experience in the MSME space, and the whole dream of the founders and their vision was to help the MSME owners with various issues that are plaguing the industry. Today, this product, KYS's product, serves over 1,000 customers from around 22 states, and more than 24 lakh suppliers are being tracked every month. The company is Bangalore based. So what are the product offerings? These are the major product offerings of the company. The first one is a working capital lending product, which is the JIT Finco's product. One of the biggest challenges for the MSMEs is the working capital management and the cash flow issues. Keeping that in mind, one of the products that was thought of initially was to help the MSME owners with working capital. And majorly the working capital module of the company helps managing the GST obligations as well as the cash flow related issues. Collateral free, fully digitized loans with a very, very minimal turnaround time. So then another product of the company, which is the KYSS offerings, one of them, the first initial ones were the GST reconciliation. All of you MSME owners are quite aware of the whole new requirement under the GST law. Once the GST has come in, the input tax credit reconciliation. And that has always caused a major roadblock for a lot of MSMEs because it's a lot of data number crunching that needs to be done. Keeping that a very easy to use, a simple product, which could reconcile the purchase register with the GSTR 2A and 2B in order to ensure that MSMEs don't lose out on the this product was started, and the GST reconciliation product is something that all the MSME owners can sign up for. Related to the reconciliation, all users mute themselves. So one of the other related product to the GST reconciliation was the supplier tracking analysis, because it's very important now under the GST regime to also know whether the suppliers are being compliant with the GST. And if they are not, that could mean that their invoices are not appearing in the in the input tax credit register in the GST portal, and that could mean a loss of ITC. So it's very critical to know suppliers to understand whether they are filing on time in order to ensure that input tax credit is not lost. So keeping that in mind, this is another product offering, which is the supply tracking analysis. Related to this GST reconciliation supply tracking, which is purchases side, there's a product offering on the sales side, which is the e-invoicing and the e-waybill software. E-invoice software is a very simple to use, a seamless software where you can just put in the data to create your own e-invoices, both digital invoices for your business as well as the e-invoice as per the GST department's regulation now for people turnover of more than 10 crores. From 1st of October, the invoice has become mandatory. It was up to 20 crores till now. It's been further reduced to 10 crores. And we believe that this is something that will come to all MSMEs, to all businesses, to all GST taxpayers very, very soon. And this tech offering will help you very easily create the invoices and also file the invoices with the GST portal. Another related aspect to the invoice is the e-way bill. For any movement of goods, when MSMEs are required to raise the e-way bills, our tech platform very easily allows you to create the e-way bills for movement of goods. So while we were looking at all of these products in terms of KYSs of GST supplier tracking and sales side, we also believe that another big product offering for the MSMEs could be the 108 helpline, which is a personalized helpline. We have a customer success team who will help you resolve all the queries. And as a part of the offering of the GST108, where we are looking to help MSMEs understand GST and understand compliance that they are being that they are following on a month-on-month basis, we also decided that along with these personalized helplines, we will also have blog posts We will also have an FAQ, which is coming up on the website, as well as these monthly webinars. And one of these this webinar also is a part of this series, where every month we are picking up the various different issues in GST and conducting these webinars on these issues. So these are the product offerings. So this was a brief introduction about the company and about KYSS. And now without any delay, we will move immediately into the topic for the day, the reverse charge mechanism. This has been something that has been debated for quite some time under the GST regime, lots of confusions. And reverse charge mechanism, to give a very brief history, was something that started with the service tax in itself. Service tax law, the older service tax law, also had this concept called reverse charge. We will understand definitely what it is in detail. And that has got passed on to GST. And ever since the advent of this reverse charge mechanism, a lot of confusion on how to report this, how to calculate for this, and how to manage your accounting on account of this is something that's been plaguing every MSME. And that was the objective of doing this session today, to discuss with all of you as to what the reverse charge mechanism basically means, in which circumstance will it be applied, how do you account for it, and how do you file the returns for it. So that's the objective of our webinar. We will move in straight into our next slides. So very simple. Let's first understand what this reverse charge is. Typically, in the GST mechanism or any tax for that matter, is where the person who's giving the services will be basically raising an invoice for the services. The recipient of the goods is required to pay the invoice value along with the GST amount to the service provider. Service provider will keep the invoice amount with himself and pay the tax that is collected to the government. This is typically how any tax works. Even when there's a sale of goods, the seller of the goods will always raise an invoice on the purchaser. Purchaser pays the value of the goods plus tax back to the seller, and the seller deposits the tax to the government. This is what is called forward charge, regular charge. This is what basically happens across in any GST law. It was happening in VAT and service tax as well. Reverse charge is something that's a little unique. Instead of the recipient of the goods or the purchaser paying GST to the supplier and the supplier paying to the government, in this case, the recipient himself will pay the GST directly to the government. That is why it is reverse charge. It's not what is usually followed. It's an exception. Instead of the recipient paying the tax to the supplier and supplier paying to government, recipient directly pays it to the government. That is what is reverse charge. Now, when will it apply? There are specified goods and services which we will cover in the next slides. Whenever somebody is receiving the specified goods or services, then this reverse charge gets triggered. And who is required to do it? There are specified recipients as well. The law says that these people who are receiving these nature of goods or services from anybody are liable to pay tax on a reverse charge basis. So that's the who and the when. And how much? There is no confusion here. The rate of taxes applicable on reverse charge is the same as that of forward charge. There's no new rate for reverse charge. Depending on whatever the HSN or SSE code, HSN is for goods, SSE for services, whatever is the GST rate applicable for that particular code or for that particular item, for that particular service, the same thing will be applicable under reverse charge as well. There is no change in terms of the rate of tax. It is only merely the mechanism in which the tax is paid. Rates are remaining the same. So what is this? Again, we spoke a lot of it. Now, very simply, what does this forward versus reverse? Now, in a very typical case, let's give an example. Receiver of services, Mr. A, bought some goods from Mr. B. Mr. A is the receiver of the goods. Mr. A is going to pay the value of the goods plus GST to Mr. B. Mr. B is going to retain the value of the goods. That is what is his sales. He will retain that. And the GST that he has received from Mr. A, who is the receiver, that he will deposit it to the government. And how does he deposit it to the government? He will pay it by way of a challan, like most of you will be doing every month. And that is reported as a sale in the GSTR1 and as output tax in GSTR3B. Very typical, simple forward charge mechanism. Now, what is reverse charge? In the case of reverse charge, Mr. A, receiving specified goods from Mr. B, is not going to be paying the GST to Mr. B. He's going to pay only the value of goods to Mr. B, and that GST that is levied on that particular invoice directly is going to be supplied to the government. But complication, how to report it? Now, the supplier of the goods will report this in his GSTR1 and GSTR3B. For the supplier, there is no disclosure change. He's going to report the sale in GSTR1 and the sale in GSTR3B as well. Now, how that reporting needs to be done, we will take it a little later, but the supplier, there's no change in supplier obligation. The only thing that changes is the supplier, instead of collecting the money from the receiver and paying it to the government, that step is avoided and the recipient will directly pay the tax to the government. That is what is the difference between forward charge versus reverse charge. Now, when is reverse charge applicable? Primarily, only two situations. What is the first situation? Which is, we have mentioned the sections. It's not critical to know the sections, but just for knowledge sake, it is very simple to know it as well. Section 9 subsection 3 in the state CGST and section 5 subsection 3. So it's the same 9353 in CGST and IGST. This specifies in certain goods and certain services, reverse charge needs to be done. Now, what these specified goods are, we will again take it in the later slide. There is another section which as of now remains suspended. Section 9.4 in CGST, 5.4 in IGST. So 9.353 is specified services. 9.4.5 is supplies made by a registered person to an unregistered person. Let's say Mr. A supplier of goods registered under GST, made sales to Mr. C, who's not registered under GST. He does not have turnover, or he possibly is the end customer, so he is not registered under GST. The law said that when Mr. A, a registered supplier, is making a supply to Mr. B, then the tax needs to be paid on reverse charge. But again, this clause remains suspended, so we will not dwell upon this too much. The government had a rationale why it has suspended it, and it's probably as of now at least not activated, and it's most likely that it may not get activated for a while. But as of now, only section that is applicable is section 9.3 and section 5.3, which is that the government specifying a few specified goods and specified services. Now, what are specified goods? We have also mentioned what is the description, who's the supposed supplier, and who's the recipient of this. So in case of cashew nuts which are being supplied by an agriculturist, when an agriculturist is selling, or a farmer basically is selling the cashew nuts to somebody who's a registered person under GST, then the farmer need not pay tax on forward charge. The recipient who is receiving these goods from the agriculturist will have to pay tax on reverse charge. This is the first scenario. Second scenario, same case, agriculture is supplying to a registered person. For all intents and purposes, we will have Mr. B as the recipient in all of this, and an agriculturist who's going to supply. So when Mr. B is a registered person under GST, who's let's say an MSME owner who's receiving these goods, when an agriculturist supplies to Mr. B cashew nuts, BD wrapper leaves, which is tendu leaves, or tobacco leaves. In these three items, when agriculturist is supplying to Mr. B, who is a registered person, Mr. B need not pay the GST to the agriculturist. Rather, he will have to directly pay the tax to the government. And the onus of paying tax on the government is now on the recipient, not on the supplier. In a forward charge, what happens? The recipient pays the tax to the supplier. It is the supplier's responsibility to pay to the government. Here, it is the recipient's responsibility to pay to the government. The next example is certain specified essential oils. It could be the mentha oils, the peppermint, spearmint, all these specified oils. When an unregistered person is selling to Mr. B, who's a registered person, in that case also the registered person, who's Mr. B, will have to pay the tax on reverse charge basis to the government. But the calculation, like I mentioned, is simple. Let's say the value of specified essential oils being supplied by the unregistered person is 1,000 rupees. In a forward charge, what would have happened? 1,180 rupees, the registered person would have paid that particular person who's the supplier. And that supplier would have kept 1,000 rupees, paid 180 to the government. In this case, the registered person, Mr. B, has to pay 1,000 rupees to the supplier, has to pay 180 directly to the government. That is why it is reverse charge. Similarly, the next example is in case of silk yarn. Any manufacturer of a yarn, the manufacturer, when he's selling to a registered person, in that case also the registered person will have to pay the tax on reverse charge basis. Let's take an alternate example. If a manufacturer of yarn is supplying to an unregistered person, it will be forward charge. The manufacturer will charge GST and pay to the government. But in case he's supplying to a registered person who's registered under GST, then reverse charge is applicable. Another example is raw cotton. Raw cotton, when an agriculturist is supplying to a registered person, in this situation as well, reverse charge will apply. Supply of lottery, which is a government business because it is government regulated. When the government is supplying lottery tickets to a distributor or a lottery agent or a selling agent, then the agent is supposed to pay tax on this on reverse charge, and the government is not responsible for paying the tax. Similarly, used vehicles. When used vehicles are being seized and confiscated by the government and then sold, scrap is sold, or the confiscated vehicles are being sold. When the government is selling to a registered person, the registered person who's buying this will have to pay tax on a reverse charge basis. The last example is a priority sector lending certificate. Now, what is this priority sector lending certificate is? A lending certificate that is given. So basically, we will not get too much into detail because this is more of a banking, not a GST related law, but just to give a very brief understanding. Every bank is supposed to loan some portion of its lending book to the priority sector. Priority sector is defined by the government: agriculture, affordable housing, etc., etc. And this is an RBI mandate. Every bank is out of its total loans that it gives, one portion, a specified percentage, has to be to this priority sector. If the bank is not able to meet criteria, they will sell something called a priority sector lending certificate that they are compliant with RBI. So in that case, when this particular bank is selling the lending certificate to a registered person, then that registered person is required to pay tax on a reverse charge basis. But I will not get too much into detail because this is a very specific example. But the fact that it is a part of the reverse charge is why we are just covering it. We will move on to very critical because these numbers are large and the number of services are large, and as well we need to understand very clearly in which situation it will apply, because it could be very different in very different situations. The first example is a GTA service, goods transport agency. Now, in case of a goods transport agency, what is it that gets applied? There are specified recipients with the government says. The government says that if the goods transport agency is supplying to these specified recipients, in that case, the recipient who's receiving the services will pay tax on a reverse charge basis. The next example is legal services. Whenever as a business entity, as an MSME owner, when you are receiving legal services from an advocate, in that case, the GST is payable on reverse charge basis. Now, why do we say taxable territory? There's a definition for taxable territory under the GST Act. Typically, it's more or less the whole of India, but there are a few, there's a technical definition to it in terms of the sea that is covered. 200 miles from the border also becomes taxable territory of India. But we will not get into the definition, but any business basically located in India who's receiving legal services, in that case, it's not the lawyer who will pay tax on forward charge. It will be the business receiving the services which will have to pay the GST directly to the government. And that is why this is another example of a reverse charge. Next is arbitration. What is arbitration? Arbitration simply means any legal settlement that happens out of court. And there's an agency, there are certified professionals, and there is a law that governs something called arbitration. If there's a contract dispute, if the business owner is not willing to go to court, or they want to settle before the case becomes legal, if they want to settle it, that is called arbitration. And in the case of arbitration also, the arbitrator who's giving the services to a business entity, in that case, the business entity will have to pay tax on reverse charge basis. The next is any case of a sponsorship services. Now, any person offering any sorts of sponsorship related services to any corporate in this definition means a company registered under the Ministry of Corporate Affairs. So if sponsorship service is being given by any person to a company or to a partnership firm, in that case, also the reverse charge kicks in. Specified government service is defined. We are not getting into the details of each of these services for want of time as well, and to minimize the complication of understanding this. But in case of specified government services, it is specified by law. When the central government, state government, a union territory, or any local authority, the example of a local authority can be the municipal corporations in different cities. So the municipal corporation, the local authority, central, state, or the union territory government is giving any sort of a specified government service to the business entities located in the taxable territory. In those cases, also the business entity receiving the service will have to pay tax on reverse charge. Renting of residential services. There is a separate discussion on this that is there in the future slides. So we will come to that in that particular slide. The next one is a TDR FSI. TDR means development rights, and FSI is a floor space index. So when is a TDR right basically given? In case government acquires land in any transaction, the government always need not pay money as consideration for acquiring the land. They also pay something called development rights. Now, the development rights can be used by the owner of that right to basically construct a building and go beyond the allowed index there. Let's say now in a particular property, you could construct 4 floors. When there is a developmental right, you are allowed to construct so much extra square footage of your building to the extent that the TDR is being given. Again, a different legal concept. We are not getting into what the meaning of a TDR is. But in case of a TDR or FSI related service, the person who's giving the service to the promoter, the builder. In that case, the recipient will have to pay taxes on the service, and the person giving the service need not collect the GST and pay to the government. Similarly, in case of a long-term land lease as well, when it's being given to a builder or a promoter of a particular property, the promoter is the person who is going to be responsible for paying the GST to the credit of the government, and it's not the person giving the service. Another very common example that a lot of MSMEs will be facing is services of a director. Now, a director of a company, body corporate also includes limited liability partnership. An LLP or a company are both registered under the Ministry of Corporate Affairs. So in that case of an entity, the director, a company or of a body corporate, when the particular director is giving services to the company as a professional charge. Now, a director of a company can be employed in two ways. He can be a salary earning employee. He can be earning professional charges. In case of salary, it's very clear. It is not at all a supply under GST. So on salary, there is no GST applicable. But if the director is giving services as a professional and is charging professional charges for it, in that case as well, the director will not pay taxes on forward charge. The company who is receiving the service from the director will have to pay tax on reverse charge. Next example is an insurance agent services, where an insurance agent is giving services of insurance to anybody carrying on the insurance business. When the agent is giving agent services to an insurance business, the insurance business will pay tax on reverse charge and the agent will not be liable to pay taxes. Similarly, a lot of the structure is very similar. So I will not get into too much of detail everywhere. But in case of a recovery agent, when the recovery agent who's basically working with a bank or a financial institution by giving services by way of recovering loans, unpaid loans, in that case also the recovery agent will not pay tax on forward charge. The bank who's receiving the service will have to pay tax on reverse charge. In case of copyright, the author of the copyright, or in case of the music composer, photographer, artist, wherever there's any art form involved and there's a copyright involved, the author of the copyright, owner of that copyright, when he's giving these services to the particular publisher or the music company or to the producer or whoever it could be, in that case, the recipient of services, that's the music company or the producers or the publishers, are the ones who will have to pay tax on reverse charge basis. So in case of Reserve Bank of India, there is an overseeing committee. There's a committee of individuals who will help the RBI by giving various services. It could be consulting or various other services. The member of the overseeing committee, when they are giving services to the Reserve Bank of India, the Reserve Bank of India will be responsible for paying tax on reverse charge basis. Direct selling agents are people in the banking industry who help secure loans for the bank. They are basically acting as agents. They will connect the borrower, that is the bank, the borrower, that is the person, and the lender, which is the bank. So for offering these kind of services, an individual direct selling agent. Now, direct selling agent can be an individual, can be a proprietorship firm, can be a company, can be an LLP. Only in case of individual, a proprietorship concern or a single person who is a direct selling agent giving services to the bank or financial institution, the bank will have to pay tax on reverse charge basis. Very similar again to a business facilitator who is bringing in business to the bank as an individual. The business facilitator, when they're giving service to the bank will have to pay tax on reverse charge basis. Business correspondent, when there's a business correspondent who's operating in a taxable territory and he has an agent who's giving him services, in that case also the business correspondent will have to pay tax on reverse charge and not the agent. The next example is security services, where any person other than a body corporate. So security services also, the security service agency can be a company, can be a non-company. If the security service agency is a company, then tax is applicable on forward charge. That is why I said in services, it's not very straightforward. It's a little complex. We need to know exactly who the supplier is and who the recipient is. So the security service is being run by a company, then that is a case of a forward charge. But if the security service agency is somebody other than a company, partnership firm, individuals, and they're offering services, then the registered person to whom they're offering services, that registered person will have to pay tax on reverse charge basis. Similarly, in case of renting of motor vehicle, same argument as security services. If the renting of motor vehicle is done by a company, then it's forward charge. If it's done by anybody other than a company, then the body corporate receiving the services will have to pay tax on reverse charge. Now, in case of the lending of securities under the lending scheme of 1997, again, a very banking specific sector. In that case, also the lender giving services to the borrower is the one who will have to pay tax on reverse charge and not the lender. May look very complex, but if we clearly understand who the supplier is, who the recipient is, then understanding whether reverse charge is applicable or not becomes very, very simple. So these are the situations in both goods and services where reverse charge is applicable. Now, why did we believe the requirement to talk about residential rent? This has been a big discussion that has happened over the last few months. A couple of months back, the government came and said residential services will now be applicable under GST. Right from the service tax law, right up to GST, residential rent was never taxed under GST. It was always commercial rent. But the department and the council, GST council, believed that there is also a tax that needs to be levied on the residential rent services. So now in which circumstance will this be applicable? Just to try and make a little bit of an analysis of this, because has been so much of confusion on this, we just try to simplify it in a very, very simple manner for all of you. Now, let's say a landlord. In this case, Mr. A is the landlord. He's receiving rent and he's also receiving, let's say, maintenance charges. The rent plus maintenance charges, all this put together is in excess of rupees 20 lakhs. The first question is, should this landlord who's receiving rent and other maintenance charges more than 20 lakhs, should he register under GST? The answer is yes. Why? 20 lakh does not mean taxable business. 20 lakhs means business. For GST, the liability of registration is on exempt, forward charge, reverse charge, zero rate, whatever it could be. Only non-GST supplies, that is not even coming under the act, only that is excluded from 20 lakhs. Otherwise, everything, even though the service may be exempt under GST or maybe charged at zero rate, but even then it forms a definition as a part of turnover. So when we are seeing 20 lakh or 40 lakh, we have to see whether, irrespective of whether it's forward charge, reverse charge, zero rate, exempt or tax, all that will form a part of this 20 lakh for eligibility for registration. So in our example, Mr. A, who is receiving rent plus maintenance more than 20 lakhs, should he register under GST? 100% he has to register under GST. Now, just because he's registered under GST, is there a liability to pay tax on forward charge? That's not required. So residential rent will be charged on a reverse charge basis. So the landlord, irrespective of his registration status, will not have to pay a GST on forward charge. Now, registered tenant, let's say Mr. B, a registered business who's registered under GST is now having something, who's rented a house. Mr. B, who's registered under GST, has rented a house or residential property to run his business. He's taken that on property, on rent. Will he be required to pay GST on reverse charge? Yes, that's what the law is saying. When a registered tenant, Mr. B, who's registered under GST, when a registered tenant is receiving services of residential rent from a landlord, irrespective of registration of the landlord, whether landlord is registered under GST or not is irrelevant to the discussion. If the tenant is registered under GST, then the GST will have to be paid on reverse charge mechanism. So the big question comes here is, a registered tenant who has taken residential property on rent for his house purpose, he has to pay tax on reverse charge is justified. Can he claim input tax credit of this? It's a little complicated argument. And although it's something that we don't want to get into detail because it's an RCM discussion, but since input tax credit is so important, I want to take this up at this point itself. In this case, if a registered tenant is paying GST on reverse charge and using the property for personal purpose, then input tax credit will not be available. It is an expense for the tenant. Why? Because personal expense, you cannot claim input tax credit. The law is very clear. But if the registered tenant has taken a residential property for running his operations, he could be a service provider, he could be a consultant who's working from home, and he has taken this whole property for his office purpose. He's sitting and doing his consulting business out of that. In that case, he can take the input tax credit of the tax that he's paid on RCM. But if he's paying it for his house, and if he's registered under GST and is paying on reverse charge, in that case, input tax credit will not be allowed, but the GST will have to be paid on reverse charge mechanism basis. Now, the next question is on maintenance. So we have spoken about rent. Rent is understood. What happens in case of maintenance services? Now, if the landlord is registered under GST, he could be charging various other services other than rent. It could be furniture rental, common area maintenance, and all of this. Now, anything other than the rent is a business in itself. So on all those cases, the landlord will charge GST on forward charge itself. On regular charge, he will charge GST if he is registered under GST. If the landlord is not registered under GST, then furniture rental and other common area maintenance will not be applicable for forward charge. If the landlord is registered, then he has to charge GST on all the services other than rent that he's giving. It could be maintenance, could be furniture rental, and whatever other services the landlord is offering. But the whole important point in all of this is that a registered tenant who's paying residential rent to a landlord will have to pay GST on reverse charge mechanism, And the requirement of whether the landlord is registered or not is irrelevant to the whole discussion. I understand this could be a little complicated. If there are questions, we will surely take it up at the end of this webinar. Moving ahead, which is the other case? Again, something that is usually missed by a lot of MSME owners, a reverse charge on imports. So what happens whenever there is a supply of service who's located outside India and there is a recipient of service in India who is a taxable person? Now, let's say there is a Mr. X in Singapore who's supplying some services to Mr. B, who is a registered person in India. In this case, the registered person who is Mr. B will have to pay GST on reverse charge to the government. But in case Mr. X, who in Singapore was giving service to Mr. C, who was not registered in India, in that case, there is no question of a reverse charge. The whole logic is simple. Mr. X, who's sitting outside India, need not register for GST in India. So he will not charge GST on this transaction. So if he's giving service to somebody who's not registered, there is no question of GST arising on the transaction itself. But if Mr. X, who's a business in Singapore, is giving his services to a registered person in India, then the department who wants to track this says that the registered person in India who's importing services will have to pay tax on reverse charge on the imports, and they can claim input tax rate of it as well, but the tax needs to be paid on a reverse charge basis. So even on imports, the reverse charge is applicable. What is this time of supply? Why is time of supply very important? Time of supply is critical to understand when do I have to pay the GST to the credit of the government. So in case of goods, the earliest of the following dates: date of receipt of the goods or date immediately after 30 days from date of invoice. Let's say the supplier raised the invoice on 1st September 2022 and the goods was received on 4th October 2022. Then the earliest of the following is 30 days from date of invoice is 1st September to 1st October. 1st October is 30 days from date of invoice. 1st October or receipt of goods 4th October, whichever is earlier, which means 1st of October is the date of, is the time of supply. So that means this is a supply in the month of October, GST needs to be paid by 20th of November. Let's say that the invoice was raised on 1st September and the goods was received on 29th September. So the 30 days from date of invoice is 1st October or date of receipt is 29th September, whichever is earlier is 29th September, which means this is a supply for 29th September and GST will have to be paid by 20th of October. This is why it's very critical to know the time of supply, because then the GST, the time limit to pay GST gets calculated from there. And that is always going to be a challenge. If you miss, there's going to be interest and late fee and all of this will get applicable. That's why very important to know what is the time of supply. In case of services, instead of date of receipt of goods, is date of payment to service provider and 60 days from date of invoice. In goods, it was 30 days from date of invoice or date of receipt of goods. In case of services, it is 60 days from date of invoice or date of payment, whichever is earlier. So that's the case of time of supply. Now, what happens if we cannot identify any of this? None of this is identifiable. Let's say for various reasons, accounting is not available or we're not able to identify, then the date of entry in the books of account will be the time of supply. If you're not able to identify any of these parameters, whenever the entry was made in the books of account, that is the time of supply. And from that month, the 20th of succeeding month, GST will have to be deposited to the credit of the government under GSTR 3B. If your quarterly supplier is 25th, if your monthly supplier is 20th, the process is all the same. For that, the payment, the process is all the same. This is just to understand when the time of supply will arise. Now, what are the rules pertaining to RCM? Now, any person, now we saw the situations where RCM is required. If a person is liable under RCM, then they need to register mandatorily irrespective of turnover. Let's say in a specified goods or services, a person was supposed to register, although he was not crossing 20 lakhs. If RCM needs to be paid, he has to mandatorily register under the Act. So that liable, the 20 lakh, 40 lakh limit is not applicable if the law is imposing a responsibility of paying tax on reverse charge. And for the supplier, although we said supplier need not collect and pay the tax, does it absolve him of all responsibility? 100% no. He still has full responsibility of raising an invoice and also declaring on the invoice that this is applicable on reverse charge. This is mandatory on the side of supplier. Supplier has to raise a proper tax invoice and also has to mention on the invoice that this is applicable under reverse charge. And every registered person who's paying tax on reverse charge basis will have to keep a separate record. So in your books of account, every registered business who's paying tax on reverse charge basis, please do maintain a ledger in your books that is called GST reverse charge. It could be CGST reverse charge, IGST reverse charge, STST reverse charge, or just GST reverse charge. Please maintain a separate ledger in your books of account, because the department can ask and call for a scrutiny of this at any point of time. If you mix it up with your other input tax credit, it could be very, very difficult to identify which is the reverse charge. Please maintain a separate ledger if you are paying tax on reverse charge basis. Now, in the GSTR1, supplier is not let go free in all of this. The invoice level data has to be provided in the GSTR1 as well. Now, in the table, how to declare it, we will show the screenshot of the portal itself in the next slide. But the supplier will have to declare the invoices on reverse charge also in GSTR1. And advance paid. In case of a reverse charge supply, we have identified that this supplies for reverse charge. Let's take a very simple example, legal services. Lawyer is giving services to a business entity. We said this is applicable for reverse charge. The business entity, let's say, paid 50,000 rupees as fees in advance. The total contract was for 2 lakh with the advocate. The advocate said, please pay in advance. So the business entity paid 50,000 rupees in advance. Even on this advance also, the reverse charge will be applicable. So the nature of service is what is critical. Whether the payment is made on advance or payment after invoice is not relevant here. If the supply of service is liable for reverse charge, even on advance, reverse charge will have to be paid. Now, in this case of purchase from unregistered dealer, this clause remains suspended for now. That's why we are not talking about it. If even suppliers or recipient of goods are registered under composition scheme, for composition scheme people, there's no question of input tax at all in the first place. But even in that case, if a composition dealer is receiving or purchasing goods from an unregistered dealer, reverse charge becomes applicable. Although there is no concept of input tax credit for a composition supplier will have to pay taxes on reverse charge in case purchases are made from unregistered dealer, and no ITC, no input tax credit will be available. However, this clause of purchase from unregistered dealer, we discussed in one of the initial slides, section 9(4) and 5(4), that remains suspended as of now. If at all it comes into existence, then it will be applicable for composition dealers as well. So please be aware that composition dealers, because there is no ITC, are they absolved from RCM? Are they not required to pay RCM? They are required to pay. It is always something that every composition dealer will have to keep in mind. Now, what happens in case of ITC? Now, reverse charge is paid is different. When in case of forward charge, the recipient very simply pays the GST to the supplier. Supplier will pay to the government. He'll file GSTR1. It appears in your GSTR2B. You have taken credit. That is a very simple case. But what happens if the recipient has paid on basis of RCM? Now, supplier, for example, cannot take. This is the case of, let's say, a supplier. A supplier will take a very classic example of a direct selling agent. Let's say a direct selling agent has made supply of goods and services to a bank, and the bank has paid reverse charge on all the supplies, because the direct selling agent has no other customer. All his customer are the bank, and the law says that in case of direct selling agent giving services to the bank will pay on reverse charge. So the bank has already paid. Now this supplier, who's the direct selling agent, he may have purchases of his own on which he would have paid GST. Can he claim ITC of that? He cannot, because again, practically, the tax liability has been already met by somebody else. So where is the question of this person claiming input tax credit? The input tax credit of a supplier who is making supply of services under reverse charge mechanism, he cannot claim the input tax credit. Can the recipient avail it? In this case, direct selling agent gave services to bank. Bank paid on reverse charge. Can the bank claim credit of this as ITC? The bank can claim it, because for the bank, there is no difference. Either they would have paid the GST to the direct selling agent, or they would have paid to the government. In both cases, they should get input tax rate. That's rightfully how it should be. And that is why on cases of reverse charge, when the recipient of service is paying tax on reverse charge basis, that tax paid is available as input tax credit. But there is one catch here. The RCM, reverse charge tax, has to be paid in cash. You cannot adjust it against credit that is available. You have to pay it in cash. Subsequent month, it can be taken as input tax credit. In the month, it has to be paid out in cash only. That is a requirement for reverse charge basis. Now, again, in case of a recipient of services, again, drawing our attention back to the discussion on that registered, residential rent GST. For availing ITC, the other conditions that are applicable for ITC, that this fact that this service has to be used in business, it has to not be a part of block credit. All this is still applicable. It does not mean that just because you have paid on reverse charge is every input tax credit available. That also cannot be an argument. If the reverse charge is paid on services which are not used in business, are used for personal purpose, like residential rent used for housing purpose and not used for business purpose, in that case, the registered GST taxpayer will have to pay tax on reverse charge. But can he claim ITC of it? He will not be able to claim ITC of it. So this is also something that has to be very importantly remembered by every MSME owner. Just because you have paid tax on reverse charge, will you get input tax credit of it? 100% no. The conditions will have to be seen before input tax credit is claimed. And in any case, even if ITC is available, the RCM should be paid in cash first and ITC can be taken in the next month only. Coming back to GSTR1, I mentioned that we will show the slide to you a little earlier. Where should the supplier declare in GSTR1? For a supplier who is supplying services or goods under reverse charge, GSTR1 does not change. All your sale invoices, forward plus reverse, has to be shown in GSTR1. But if it is a reverse charge supply, there is one small tick box. We have highlighted that in red. That tick box will have to be ticked. That is mandatory because then that is how the GST portal will identify that this is a sale for the supplier, but tax has not been paid by the supplier, has been paid by the recipient because it's of reverse charge. Why is this extremely critical to make this tick mark here? If this tick is not put, let's say a supplier has made supply of 1,000 rupees under forward charge, 1,000 rupees under reverse charge. The tax applicable on this is 180 on forward charge, 180 on reverse charge. 360 rupees the supplier was supposed to pay as tax. But in the GSTR 3B, the supplier would have only paid 180 rupees. Why? Because the other 180, the recipient has paid on reverse. If this was not shown, let's say the MSME owner, the supplier missed showing this, then the GST department will send him a demand by saying that your GSTR1 says output tax is 360, but your GSTR3B says only 180. That differentially now you pay the tax. But if a reverse charge is ticked, then the government also knows that 180 is valid to pay. The other 180, the recipient would have already paid. That is why for a supplier, if you are an MSME owner and a supplier who's supplying goods or service under reverse charge, please ensure that in your GSTR1, the supply under reverse charge is ticked without fail, because if that is not done, then the GSTR3B, there could be a demand that is sitting for tax payment. What should the recipient of services do to claim the ITC? The recipient of services simply will have to show inward supply is liable to reverse charge. Now, in case to declare in the GSTR3B of the supply of the recipient of services, the recipient of service will show his outward supply, taxable supply, all that is same. But the recipient has also paid tax on reverse charge. Where to declare that? It has to be declared in table 3.1D, inward supply is liable to reverse charge. The value of the supply and the value of tax has to be declared. We have highlighted that table in red. There, the recipient will have to declare in the GSTR 3B and he has to pay that tax. The tax on this column D will have to be paid in cash only. It cannot be paid by using input tax credit. It has to be paid in cash. The next month, the input tax credit can be claimed. So there is no loss, but it's just that cash has to be paid out upfront in the first month. The next month, ITC can be claimed. So this is the disclosure. Just coming back, GSTR1 for the supplier, this is the disclosure. GSTR 3B for the recipient, this is the disclosure. So these are the two disclosures that will have to be done in case of reverse charge by the supplier and by the recipient. And now if there are any questions from any of you, you can either put it in the chat or you can please unmute yourselves and ask the questions that you want to.